Who do people call when they're really in trouble? The SWAT team, Special Weapons and Tactics. Today I'm going to talk to you about a different kind of SWOT. Strengths, weaknesses, opportunities and threats in the Calgary real estate market and what they mean to you. The Calgary Real Estate Board had the 2019 forecast a couple weeks ago, and in the past haven't been in full alignment with the numbers that they had. Last year they predicted 0% or a little bit of growth, whereas I was at 2% down in prices on houses and 5% down on apartments. This year, I think we're pretty much in alignment. Let's look at what happened in 2018 first. So in 2018, you can see the detached sector is down almost 16% in sales and 1.5% in prices. Apartments weren't down as much as I expected because they already had a pretty significant drop the year before. Sales were down over 7% and prices down 2.7%, so still almost 3%, pretty significant. Attached down 15.5% in sales, 1.5% in price. And the city of Calgary overall almost 15% down in sales and over 1.5% in price. As always, the averages can be dangerous. You know, if you have your head in the oven and your feet in the freezer, overall your temperature is okay. But either way, you're dead. So obviously, it matters where you are. Let's look at what we're going to expect in 2019. So 2019, we're expecting sales to continue to soften and prices will also continue to soften. I'm in alignment with what Anne-Marie was predicting in her sales drops. 2.3% in detached, 2.3% basically in apartments, 2.5% in attached. So overall in Calgary, 2.35% drop. So this is the fourth consecutive year of price decreases in Calgary. That's actually a decline of about 9% since 2014. So if you purchased in 2014, that's who is most affected by the current market situation. If you can see, the long-term average, though, you're still doing fairly well on prices. So over the last 10 years, you're still doing fairly well. Why is this happening? In addition to the obvious oil prices and the uncertainty in the political environment, interest rates are the big thing. So not only have interest rates been creeping up, but when the stress test came into effect January 1st last year, it was the equivalent of having a 2% increase in interest rates, which really reduces people's buying power. So what is impacting the prices? The energy sector, the economy is continuing to soften. Consumer confidence, people aren't certain, and when they're not certain, fight, flight, or freeze. A lot of people are freezing. Employment, the good paying jobs continue to decrease. The lending market is tightening rules and the interest rates continue to go up. And the housing supply is going up. Supply and demand, basic economics, when supply goes up, prices decrease. On the opposite side, what do we have going for us? We have some net migration increases. So the population of Calgary is increasing. A lot of this is new immigrants though. So those people are actually renting. They're not buying right away. So net migration is increasing, and what that means is when people come in, they generally rent for the first couple of years before they purchase. And that's why vacancy rates have actually been decreasing over the past year, which is an opportunity for investors. Investors, if you can buy for less and your vacancy rates are decreasing, so supply and demand again, rates are going to start to increase. Other opportunities, if you're looking at moving up or moving down, then there's some opportunities because right now properties, especially detached houses between $350 and $450 are really hot. We're even generating multiple offers in some of those. Sometimes it takes 2 and 3 times to sell them, but we're still getting the job done. So if those people are, if you're one of those people that are in the that hot zone and you want to move up into a higher priced home, a larger home, then that market is softer and you can get a better deal, so your gap is smaller. Also, if you're looking at moving down, so the condominium market is softer and there's better deals there than ever. So your gap, even though you may be getting less for your property, the gap that you're paying is actually less. So if you get the ego out that you're selling your house for less, and you just look at the gap, your net numbers, then you'll see that it's actually some pretty significant savings and opportunities that haven't been seen in Calgary for years. Threats. What are the threats of this prediction of 2019 not happening? And what are the threats to it being worse or better, or so inaccurate essentially? So pipelines, if there's any major announcements on the pipeline, what's happening there? Employment. If we have some major employers come in or go out, then that will affect things. The biggest driver of real estate essentially is jobs. Consumer confidence. What people's mindsets are is affecting the market. Interest rates, we're expecting interest rates to creep up a little bit, but not much because it's an election year. But again, that reduces buying power. And government, it's an election year, so there's some uncertainty. A lot of people may be waiting. All of these things are fairly major things that take a long time to shift. It takes a long time to turn this ship, being the Calgary area real estate market. What's your situation? Give us a call and we'll help you get to your goals. We'll help you with your own unique, customized SWOT analysis, your strengths, weaknesses, opportunities, and threats. Till next time, I'm Eric Mortimer, helping you solve your problems and realize your dreams.